Hey everybody, how's everybody doing out there? Welcome back to Becoming Fort Washington City Part 3. We're trucking along here, putting out some really good information, and hopefully you are enjoying that. In Part 1, just as a summary, we talked about the fiscal constraints of county government and how strong city governments, strong cities and towns can assist in solving some of the problems that comes with those fiscal constraints. So you want to go back and check that out. Part 2, we started to demystify taxes, explaining how your county taxes are reduced, what goes into that, and what that looks like. And so that brings us to part 3. Today, we're going to get specific here about Fort Washington, what a Fort Washington city might look like, and what the tax implications are. So let's get going on that, shall we? Here we go. So what we're trying to do, and what our proposal is that we work towards a tax differential of 0.100. If you remember in part 2, the tax differential is how much your county taxes are reduced. And so our proposal, our goal is to present to the citizens of Fort Washington a level of service that is going to end up with or result in a tax differential or a tax reduction of 0.100. Specifically, our initial service plan is to provide public works, inspections, permits, inspections, code enforcement, roads, that kind of stuff, garbage and snow removal, community beautification, housing and community development, with an emphasis probably more so on community development, police patrol and admin, crossing guards, police vehicles, things of that nature. Also, some street lighting and traffic control services, strategic economic development, land use and zoning, and admin. One of the areas that's not on here because we're still checking on it is environment. The under the regulations, environment covers animal control only. So one of the things we're looking at is can a city take on some of the different environmental services like stormwater management, stormwater programs, et cetera, stuff like that. So we're still checking into that. But at the end of the day, we want to provide a service level that gets us to about a tax differential of 0.100. It's equal to what Fort Forest Heights does right now. All right. So what's that look like? Well, with a tax differential of 0.100, and you can see it there in red, that's going to take your county tax rate, your current county tax rate, down from 1.00 per $100 of assessed land value. So 1.00, which it is now, minus zero point 0.1 gets you to a county tax rate of 0.90 after the differential. So your county taxes are reduced by that amount, and it takes you to 0.900. Then we want to levy a tax increase on city residents of either 0.35, 0.40, or 0.45, depending on your income. We'll show you that here in just a second, and so you can get a look at what it looks like. So again, a 0.35, 0.40, or 0.45 tax increase depending on your household income. That makes it progressive so that the more money you make, the more that you are shouldering the burden of the services and the cost of those services, which we think is fair. Okay. If you are age 60 or above, no city tax. After many years of paying into taxes, we feel like you get to that point in your life, and maybe you're not making as much or you don't have as much discretionary income. It only makes sense that if your age is 60 or above, no city tax. So let's break it down now. Let's get down to the nitty gritty. All right. So we broke out this table here for you, and we put it in the different columns. This is using an example of a homeowner whose a home is valued at $500,000, meaning that your assessed value is $5,000 or 1/100th of your homeowner value. So $500,000 divided by 100 equals 5,000. I think, right? That's pretty good math there. So if not, you can come back and check me, but I think that's right. Nah, I'm just joking. It's $5,000. All right. So if you look down column one, you're going to see the different taxes here. You got a county tax, education, state of Maryland. You know these and you're familiar with these very well because it's on your consolidated tax bill right now. Parking, planning, stormwater, transit. Yep, that's your metro tax, a city tax rate, total tax rate, all of that stuff. We added the city tax rate in just as an example, okay? Because we're talking about becoming Fort Washington City. All right. And for each one of these situations, we're going to take a look at the total tax rate, your tax bill, what that change would be if we went from currently where you are to becoming a city, and what that change is and how much that would be per month. All right. So in column two, this is our current Fort Washington taxes if you're in Fort Washington. So right now, there is no city, and so there is no city tax rate. But if you take a look at your county taxes, it's 1.00 minus the homestead tax credit, which takes you down to 0.96. Then you get your education tax rate, state of Maryland, park and planning. All of those don't change. They're always going to be the same no matter what across the board here. But that's what they look like. There is no city tax rate, so that's zero. So your total tax rate is 1.4860. You add those up to 1.4860. You multiply that by 5,000, and you get a tax bill of $7,430. Right. Let's go over to column three. So now, let's say we become a city, okay? And you're a senior. As you can see in the red circle, your county tax rate has now gone down to 0.90, just like we said on the previous slide. The rest of your tax rate numbers don't change, okay? So when you do that math, there is no city tax because you're 60 and above, so there's no city tax for you. So your total tax rate is actually lower now, 1.4260 for a total tax bill of $7,130, which is $300 less. So you're actually paying less money in taxes. Let's go over to column number 4. And in this scenario, your household income is under $80,000. Again, your county taxes are 0.90. All of the rest of the rates are the same, except for down at the city tax rate, it is now 0.35. We're levying that tax on you to pay for services. Total tax rate of 1.7760 for a tax bill of $88.80 or $1,450 extra per year or $120 per month. Column 5. Your household income is now between $80,000 and $150,000. Same numbers, 0.900 as your county tax rate. The rest of the numbers the same, except for the city tax rate, which is now 0.400. Total tax rate 1.8260. Tax bill 9130 for an addition of $1,700 or $141 per month. And finally, if you're making above $150,000, again, 0.90 for your county tax rate. The rest of the numbers the same. The city tax rate will be 0.45. Your total tax rate 1.8760, 1.8760 that is, for a tax bill of $93.80, an additional $1,950 a year or $162.50 per month. And so that's what the numbers look like for this proposed Fort Washington City, at least to start. Okay. So where does this city staff work? That's a question that we get a lot. And our answer to that is initially we propose to rent space We've got plenty of it around Fort Washington. You can see some of those there. We've got office buildings all around. Some of them are of the older variety, but they have space in them and we can use them. We've also got Big Rosecroft Raceway. We also have the new Fort Washington Business Complex over on Livingston Road, which is certainly a potentially nice option there. But a lot of smaller cities kind of start that way to get things going, and eventually there will be buildings for these people to work in. But to start, just rent them. That's all, and then you move on. So if you are interested in working with us and our committee, we meet just about every month. If you are interested in helping us guide this journey, come up with different solutions, that's the email there. Feel free to hit me up there. If you have additional questions, you can hit me up there. We love to get your help. We love to get your thoughts because this is a community journey that we want to take forever. We want to take together, excuse me. So that's part three. I hope that brings forth some thoughts from you and helps clarify the journey, demystify this issue of taxes. Certainly understand the tangible nature of taxes, and paying taxes hurts. But as we said before, right now we are paying money into a county-based system that doesn't have enough revenue to begin with, and that money is being spent in other places. This ensures that some of that money, the money that we designate, will come back to Fort Washington, and we can use it the way we want to use it. Coming up in part four, we're going to talk about an economic development proposal because that is as important as anything. Because what we want to make sure that we're doing is that we are providing a way or a thought process with stakeholders where we can draw commerce to the area, workforce density to the area, commercial tax revenue, commercial property tax revenue, excuse me, to the area so that the cost of services doesn't continue to be carried. The burden of that is not carried by residents. So, all right. So there you go. That's part three. Hopefully you enjoyed that. Look forward to hearing from a lot of you out there, and also look forward to seeing you in part four. All right, everybody. Have a great day, and we'll talk to you soon.